Peter Eliades with you again. We're going to do something a little different today. Um, so far, these updates have been available to a very select group of people, actually only 3, 4, or 5 people that we have given the link to go to these updates to give us their professional and friendly opinions as to what we're doing and how they're enjoying it and what we might change about it. We're going to start slowly but surely trying to build up the subscriptions on the channel so we can get a substantial number of people watching. A lot of this is to promote our software, which will be coming out hopefully within the next couple of months. We encourage you to go to the bottom right of your screen. There's a little thing, we should have made it a little bigger, but it allows you to subscribe to the channel. And if you subscribe to the channel, then you will theoretically be notified when new updates come on. So if you'll just click that little button on the bottom right of your screen that says subscribe to updates, that will make you a subscriber. There are no charges involved. And in fact, I think there's a bell on the bottom right too on the screen below the regular viewing screen where you can get notifications. So anytime a new update is put on, and once in a while we might surprise with an update more than once a day, you will be notified of that update. So we're in the process of changing things around slowly but surely, attempting to get more exposure for the channel now. You're more than welcome to tell all your friends about this channel. And as I said, for the time being at least, it's completely free of charge. That much having been said, let's get into the market. This is the S&P 500 composite nominal 20-week downside projection that you see. This is the 10-week offset. We've shown you this now for the past couple of days, and it remains important. The closing number is moving up into the midpoint of the bars. We'll show you here. Here is the close so far this week. Now, the question is, what would it take to get up above here, which would move the median for the week above the green line? We gave you a taste of that yesterday. We're going to give you the exact number today. The 10-week offset median this week is at, I'm going to find the S&P here, 2933.96. That's where this green offset is this week. So the number that's required to move this median bar from here to here above the offset this week would be 2976.07. That would take it exactly to the line. We need readings higher than that. So any reading this week that moved above 2976.07 on the S&P 500 composite index, cash index, would invalidate this downside projection, at least temporarily, and would in fact lead to another upside projection. Not much higher, but to an upside projection. So that's where we stand with the S&P. Let's take a look at the Dow Jones Industrial Average. On the Dow Jones Industrial Average, we have a reading of, this week's reading would be 26,635.92. Right in this area here. That's the exact reading for where this offset line is. This week's low so far has been 25,978.22, which means there has been a difference, or there is a difference, between the low of the week and where the median line is from 10 weeks ago of 657.7 points. And that means that in order to get above this line this week, we need a high on the Dow of 27,293.62. That would invalidate this downside projection. We've already given you these downside projections, but no harm in repeating them. On the Dow, 24,173.67 to 24,760.03. So those are the Dow and the S&P 10-week offsets. Now we'll take a look at the 20-week offsets. This one is for the Dow. As you can see, we're not that far away, at least in terms of where we closed today, but you still have to not only get up to the line, but an equal distance above the line as you are below it. So on the Dow this week, what's required is a reading of 26,940.62. That would bring you above this line. So we give you these numbers because we want you to know that as of now, the downside projections we have given you remain in effect. This one on the Dow is a little more impressive to the downside because it's calling for 24,716 rounded off to a single digit and 24,120 on the low side of that projection. So that's where we stand in terms of those projections for the Dow and the S&P. And so far, as we said, the downside projections remain in effect. So if this is a counter trend move to the upside, how high can we expect the market to go? Well, here are some indications. This is a daily chart, and the offset on this daily chart, as you can see here, is 3.5 to 4. That's for the nominal 10-day projection. And the nominal 10-day projection on the Dow for the past several days has been between 26,450 rounded off to 26,641 or 642 rounded off. And as you can see, we reached into that projection window already. Today we kind of approached it again. Mind the divergences now that we've seen between the Dow and the S&P. The S&P today, I believe, we'll take a look at it in a second, moved above this high on August 30th. The Dow did not. So we do have a divergence, and we have an indication that the upside projections have been satisfied already. Let's stay on that chart and take a look at the S&P cash. As we noted, well, the S&P did not go to a higher high, but it came really close to the high of August 30th, whereas the Dow did not. And as you can see from the projection chart here, we've had projections. We just reached into the lower side of that projection a couple of days ago, 2 market days ago, and we've come back up towards it again. The high side of that projection allows for a high as 2961.67. So those are levels that we would allow for on the upside and still believe that the downside projections are in effect and we remain in a downtrend. Should we start moving above some of these shorter term levels, then it would be our opinion that different things were happening in terms of the market. The downside projections could well be invalidated. Okay, we want these updates to be primarily for cycle projections, but the technician within us also obviously is always looking at other things. This is the daily advanced decline line of the New York Stock Exchange. This says 214.13 to 82.19. That was a label we gave it for a report that we wrote. Actually, it's up to date. If we go to the right here, it's up to date into the present time. And look at what's interesting here. If we go back a little bit on this, this actually begins back in October of 2011. So if we draw up a bottoms line from October of 2011 to the important bottom in February of 2016, then we draw a parallel to that bottoms line that begins at the July of 2014 high. Look what happens. This is the January of 18 high. This is the September of 18 high. We have continued on to a new high in July of this year. And in the past day or two, we've actually gone to another new high in the daily advanced decline line. Theoretically, new highs in the AD line, especially all-time highs like these, are bullish. But we want you to be aware of where we are in this overall long-term channel that goes back now 7 or 8 years. We're very close to the upper side of that channel. We didn't quite meet it at the July high, and perhaps we're going to go up and meet it, which would mean not too much larger of a move to the upside. The other thing we've done on a very short-term basis is draw a trend line, a tops line, between the January of 18 and the September of 18 highs. Notice that the July high of this year went slightly above it, and now we are right back to it again. So we're in an area now of potentially great resistance on the daily advanced decline line. And even though, because it is making a new all-time high, you can make a bullish case, I think the warning flags are up for this particular indicator. That's it for now. We'll update you again tomorrow. Thanks for watching.